Welcome to the USD CAD Discovery number 3 video commentary, which we're going to be discussing here a huge finding we made regarding a high correlation of this currency pair, which equals very low risk when trading the pair. So let's start with what is correlation. Simply stated, correlation between two currencies refers to the degree of similarities between their fundamental characteristics. You trade the currency market based on technical characteristics, but behind these technical characteristics is the fact that these currencies belong to countries with established economies. There are quite a lot of fundamental characteristics within each one of those economies that dictate how the currency is going to behave versus another currency. For example, if the economies related to the currencies are very dependent on each other, they live off of each other, have a very high element of trade between them, key economic treaties, etc., then it means these economies are highly correlated. Highly correlated economies, and this is a very key and important point here, equate to much more stable behavior of the currencies involved. For example, the US and Canada have a highly correlated economy, which means very stable and predictable price moves of the USD CAD, which is the US dollar and the Canadian dollar. So it's really quite interesting and very important, and please pay attention to this. Do you know what the #1 factor preventing Forex trading systems and robots from being stable over the long run is? And by stable, I mean low drawdowns, no surprises, steady profitability. That #1 factor is economic news releases. We all know these, we all fear them. They are system killers. News releases are the most unpredictable aspect of FX trading. And the unpredictable part isn't just what happens right after the news is released, or in other words, the surprise itself in short term. More importantly is the direction the currency pair will take for the next 12 to 48 hours. That is key. Most, if not all, FX trading strategies, either manual or traded via robot, break down because of news releases. They're unpredictable, their content, how they affect the market after they're released. That's because over 90% of currencies are twinned with economies where there is very low correlation. Not so with the USD CAD pair. The US and Canadian economies are so correlated and have so much in common in so many different aspects. Expanding on them is beyond the scope of this explanation. But news releases that kill market predictability with most other pairs have almost zero effect on this pair. And guys, this is huge. This is very important. Now you're starting to see, I believe, the reason why things work and don't work. There's always a reason. Let's look at some examples and see the huge importance here, the monumental importance of this discovery, what it means to your bottom line as a Forex trader. Example #1 here, April 13th, 2012, 8:30 and 12:30 GMT. Consumer Price Index in Germany and USA hit the market. All main USD related pairs take a hit all day long, except two. Yep, USD CAD. Okay, the Euro USD loses over 100 pips due to the news release. Huge loss. Currency pair simply collapses. The pound dollar loses over 110 pips due to the news release. Again, just collapses. What happens with the USD CAD? It loses a mere 33 pips, which is nothing, due to the news release. It loses those 33 pips, and then bam, corrects itself immediately, and remains flat. Okay, if you would have been long that day, nothing major would have happened. You wouldn't even have seen anything, more than likely. It's going in the same direction that it was previously. And one important thing to note here, the news affected both currency pairs beyond the specific momentary price spikes that occur right after the news was released. In fact, the effect continued for at least 12 hours. I mean, you can see the price moving down over a long period of time. That's very different than a 5 or 10 minute spike and then things calm down. Okay, it's just not so in these cases here. Goes down hard and continues. That's something that, couldn't have been predicted. Which means that lots of robots and lots of manual traders got hit. Not so with the USD CAD. Unpredictability from news releases is literally almost taken out of the equation with USD CAD. Let's take a look at another example here. Here we've got, and there are quite a few examples really. We can go over them all day long, but just so you understand, let's hit a few. August 1st, 2011, 8:30 to 9 GMT, United Kingdom Purchasing Manager Index Manufacturing plus European Union Unemployment Rate. This is released. Some data hit the market. All main USD related pairs take a hit all day long, except, you got it, USD CAD. Euro USD, 200 pips due to the release. Pound dollar collapses 190 pips due to the release. What happens to the USD CAD? It moves 78 pips. It does get affected, okay, but at a much lesser degree than the other pairs. We're looking at 200 and 190 compared to 78, okay? The move is much more manageable and predictable. Forget about stop losses. You're probably already thinking about this in terms of stop losses. That's what it's all about, risk management. 78 pips due to the news release, and then that's it. It calmed down. Look at this. Another important point regarding these examples, these unpredictable news release driven price moves always spill into the Asian market. Always spill into the Asian session. As a rule of thumb, if the price move was unpredictable during the EU and US sessions, you'll most likely see unpredictable price moves in the Asian session. Since the US and Canadian economies have such a high degree of correlation, major news releases don't affect this pair's movement, which in turn means a safe and predictable trading environment during the Asian session. That means profit. Stability, that's what trading is all about. Correctly speculating where prices will be going. Stability, that's what trading is all about. Correctly speculating where prices will be going. Now, example number 3, September 6, 2011, 6 GMT, Swiss government monetary intervention. Okay, main USD related pairs again lose 90 plus pips. Pound dollar close to 200 pips for the day, except US CAD, which finished the day almost flat, meaning hardly changed. The euro closes the day with a drop of 100 pips. Okay, this is the start of the day. Here's the end of the day. I mean, look at these movements here, okay? These movements are killers. They would have wiped out most traders. This is not a trend. It's not market consolidation. It's pure price movement that no trader, no system, and no robot could have predicted. The pound closes the day with a drop of 180 pips. Huge spikes of close to 250 pips, as you can see here. Huge market swings. What happened to USD CAD? It ends the day almost flat, right where it started. Okay, so we've got where the news came out. This is the start of our day. This is the end of the day. No price change from the previous day's close. Okay, here's where the previous day actually closed. And then we've got September 6th at midnight here. Okay, almost flat. Nothing big, nothing that would have triggered stop losses, nothing that would have concerned any reasonable or robust trading strategy. This is very powerful, guys. When the market goes crazy and all the other robots get hit hard, the PipJet USD CAD robot combination achieves huge profits. This is what you need to be concentrating on: stability. Example 4, April 3rd, 2012 at 1800 GMT. FOMC meeting results came out. Main USD related pairs lose over 100 pips within an hour or so and continue sliding through the rest of the day of the US and Asian session. USD CAD not affected at all. So we've got the euro dollar loses over 100 pips in about an hour and then keeps sliding. Pound dollar, same thing, loses 90 pips, keeps sliding. What do we see here? At the start of April 3rd to almost midnight, the session mostly ranges. 35 pips move up and then back down. The session ends almost where it started. And now you can start to grasp the power of the correlation of the two economies. How does PipJet profit from this discovery? Well, one of the key factors that prevent FX systems from being profitable on a consistent basis is the element of unpredictability. The whole point of trading is being, and this is the logic of trading, being able to accurately predict where price is going to be in the next minute, hour, day, or month, whatever time frame you're trading in. Unpredictability is the main concern of most FX systems. Unpredictability is the problem most traders face, knowing what will happen with a high degree of accuracy in the future. As it is, markets are unpredictable, but news releases make our jobs as traders and as system developers much more difficult. Technical analysis can help us determine with reasonable accuracy what will happen in the near future, but that's technical analysis. News releases are fundamental elements that come into the market and change everything most of the time that technical analysis predicted for the near future. That is key. Throughout the past 3 years, since the launch of our first Forex robot, we've been continually searching for a significant edge that would allow us to create a robot that trades profitably on a consistent basis. And consistent is a very important term here. We managed to find quite a few trading strategies to fit the bill, but never to the point of not needing to deal with any unpredictabilities that the FX market's so famous for until now. As you can see from PipJet's strategy description, again, make sure you do go over that, read it, watch it, watch the video. The robot does a great job of filtering and assessing optimal market conditions for high success ratio trades. Proof of that is in our own trading accounts, which have been running, for quite some time. One of them close to 2 years. Now, with the element that contributes most to the problem of creating close to perfect market behavior, predictability removed from the equation, okay, USD CAD stability within news releases. PipJet delivers the consistency in terms of profit and accuracy that's needed when trading real money. No more, oops, my system or my robot didn't cope well with this or that market movement, which, by the way, if you've been trading for a little bit or reading about trading results from other people, it's always that unpredictable market move that hit everyone, that destroyed the profitability of trading systems and robots. It's always that price swing. Why did my stop loss get hit? I never saw it coming. My technical analysis never predicted anything close to that swing or that breakout or that movement opposite to the direction of the trade I'm in right now. And that's what it's all about at the end of the day. And that's, what is the greatness that is in PipJet. That's why it took us 3 years to introduce a new robot, because we were looking at things like that. These are things that support a trading strategy. They contribute to a trading strategy. These are things that are, leveraged within the trading strategy for optimal performance. These are things that are leveraged within the trading strategy for optimal performance, profitability, and stability. So thanks for watching. Please make sure you watch video number 4, USD CAD discovery number 4, and make sure you watch the videos on the other discoveries as well if you haven't.